Hello, I am Oya Benjamin. You are welcome again to my channel, and in today's video we are going to be looking at an indicator called Bollinger Band. We are going to be looking at how to interpret this Bollinger Band, how to make a better entering and exit decision using Bollinger Band, how to use Bollinger Band to trade breakout strategy, and how to use Bollinger Band to discover or to identify when there will be a reversal or a pullback in price trend. These are the things that we are going to look into in this video today. Come with me as we go into the class properly. What is Bollinger Band? Bollinger Band is an indicator that changes its shape based on the current price action, measuring the momentum and the volatility of the market trend. Bollinger Band comes in three bands: the upper band, the middle band, and the lower band. The middle band is the 20 moving average. Now, the 20 moving average helps us to measure the price trend and the volatility in price trend. Now, the distance between the middle band to the upper band is 2 standard deviations away from each other. Now, from the middle band also to the lower band is 2 standard deviations. The higher the standard deviation, the higher the volatility recorded. When you are trading using Bollinger Band indicator, I want you to always pay attention at the middle band, which is the 20 moving average. Now, the middle band helps you to determine what is going on in the market. Now, the upper band and the lower band helps you to give you the pullback decision. Is this market going to pull back and return again, or is this market going to continue? So you pay close attention to this when you are trading Bollinger Band. Let's go into the chart as I show you how I use the Bollinger Band to make my entry and my exit decision. Now, number one thing I want you to understand when trading with this Bollinger Band: as long as the candles are still riding above the 20 moving average, using it as a support level, the trend will continue in its present state until there is a candle crossing through the 20 moving average or the moving average as an indication that there will be a change in price movement. Once that is confirmed with 1 or 2 candlesticks, the trend will change. Now, let's look at it here. You discover that the trend has been above the 20 moving average, and all of a sudden this particular candle crosses through the moving average, with this first candle, the tail below, the second candle below, the third candle below. Now, it is a signal that there will be what? That there will be a reversal in price movement. The second thing I want you to pay attention to is this. Pay attention to the candlestick pattern that is formed at the upper or the lower band. Determines if there is going to be a reversal in that price movement or if it will still continue. Okay, are you with me? Now, let's look at this activity here. You discover that this particular trend has been riding on the 20 moving average. You see, riding on the 20 moving average. All of a sudden, a bearish pin bar or inverse hammer was formed. Okay, an inverse hammer followed by an inverse hammer followed by a bearish confirmation is giving you a signal that this market will no longer continue in an uptrend, but there will be what? A reversal in price movement. You must pay keen attention at the pattern that is formed at the upper or the lower band. Now, those patterns will help you to know when to exit the market. The Bollinger Band measures the volatility and the momentum of the price movement, the price trend. Now, just like I said, it's made up of 3 bands: the upper band, the middle band, and the lower band. Now, whenever these 3 bands begin to close up on each other, begin to squeeze, at that point, the market is giving you a signal to wait, because the market has entered in the state of indecision. At that point, the market is thinking, which trend should I continue? Should I continue with the new trend, or should I change a trend pattern? Let's look at it in the chart and see. Now, if you come here, you will discover that there was a high volatility here. The bands were separate apart, and all of a sudden the bands started coming together, started closing on each other. Now from this point to this point, the market is telling you wait. You will notice that there is no tangible decision that is taken at this point. Now because at this point the market is still in the state of indecision, knowing should I go up or should I go down. So at this point, as a trader, you should what? You should wait. Above all, I would advise you, an indicator should not be traded alone. Now, one or two indicators will give you an accurate interpretation of what you are looking for. I will always advise trade your Bollinger Band using another indicator. It's either you use the RSI or other known indicator, but for me, I like using my Bollinger Band with stochastic indicator. With these two combinations, I get a perfect interpretation of what the indicators are trying to say concerning the market trend. And on this note, we have come to the end of today's video. Thank you for watching. See you in my subsequent video. Have a successful trading week ahead. Bye.